Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and today we're going to be speaking about what's happening in the world of digital assets and cryptocurrencies as it applies to countries, governments. That's right. We might be talking a little bit about what's happening with the SEC and the current regulation discussions, along with central bank digital currencies, along with maybe even the digital yuan, as we talked a little earlier today, as well, about some of the big movements and integrations that has happened as well. But also in general, what's happening in this space and what do you need to know, either as investors or entrepreneurs looking at all sides of this. And a big thank you to the LaToken team, to Maria and Hasmick for making today's episode possible. If you haven't done so already, please do check out LaToken.com to hear from today's speakers and all speakers of the VCTV family. With that, let me jump right in and introduce two of my favorite co-hosts. That's right. I am showboating a little bit today about that. We've got a Go Blue Michigan hat on, and we've got the one and only Grandmaster of Artificial Intelligence. So it's going to be a fun episode. Gary, why don't you kick us off, a little intro and background?
Yeah, my name is Gary Fowler. Great to be here, Kyle. I'm a serial entrepreneur investor. I've done 17 companies. I've been involved in 2 unicorns. I was on the original management team of Click Software, sold to Salesforce for $1.35 billion a little less than 4 years ago, and also Eva.ai, an AI HR tech company. I'm the CEO, co-founder, and president of GSD Venture Studios, a premier AI and quantum venture studio operating in 24 countries. Our idea is that intellectual capacity is evenly spread around the world, but opportunities aren't. And we're working from Africa to Singapore to Europe, looking for those companies and using Silicon Valley as a port to help them go global. Great to be here.
Wonderful. Thank you very much, Gary. And David, welcome back as well. A little intro background.
Sure. Thanks again. Happy to be here. Always a pleasure to be with Gary and certainly with you, Kyle. David Tawil. I am the president of ProChain Capital. ProChain is a crypto-focused hedge fund that is focused both long and short on tokens, also trades equities of companies that are either involved in crypto or in blockchain or in the digital payments space. In addition, we also have some venture and seed round investments in our portfolio as well. A minority of the NAV is invested in private companies.
Wonderful. Well, gentlemen, welcome again to today's episode and this conversation, which is very important, as we were talking a little bit pre-show right now, as there is a lot of discussion. So why are countries pushing back and in some cases banning digital currencies or, again, digital assets? We've got Square that saw, I believe, over $2.7 billion from transactions around Bitcoin this year in the first half alone. We've got integrations around retailers, fast food with Quiznos, and back working together to start accepting digital assets. This seems to be something we're moving into, but we know that there's also conversation around, again, the SEC and regulation of digital assets furthermore. So David, if you could, because this is such a big topic over the past, I'd say 7 to 10 days, as we've been covering it, give us kind of an overview of where we are with these discussions, what's happening, and why this all matters now more than ever.
So I'd say there are 2 catalysts that really have brought this to the forefront. First of all, the infrastructure bill that proposes to raise funds from the crypto asset community to fund that infrastructure. And the way, at least currently drafted, they're going to go ahead and do that is tax a bunch of enterprises, potentially some that can record tax and others that are going to have a really difficult time recording taxes. So that's one area, and certainly the industry, I would say, is somewhat up in arms because the bill is drafted quite willy-nilly. It seems that the drafters of the bill don't really know or understand the various constituents in the space and how they do business, and how the current language could go ahead and snare a bunch of companies that probably don't make sense to snare. The second, and I think the more important, is what happened yesterday with SEC Chairman Gary Gensler speaking at the Aspen Institute's conference, which generally does not focus on things like cryptocurrency, much more concerned with worldwide, issues. But this was teed up as something relating to security issues worldwide because of the use of crypto assets, and I guess potentially their use for nefarious activities and so forth. And that gave Gary, or Mr. Gensler, I should say, Chair Gensler, an opportunity to go ahead and, give a more fulsome view, on his position on crypto. I know I've spoken for a little bit thus far, but let me just say the following with respect to Gensler's remarks, which are available. You can read them. There is transcript posted on the SEC's website. I think there were a couple of inflammatory phrases that were used during the course of the remarks. I don't know. I mean, clearly they were intended. The question is what the intention was by it, i.e. what kind of result or reaction is Chair Gensler looking for. One of the most memorable is that he called the asset class the Wild West, which played very well to Senator Elizabeth Warren. But on the other hand, what he did essentially say is the SEC wants to regulate this space and needs resources to regulate the space. And monetary resources, he alluded to, the more important resources that they need is essentially legislation. And so, all in, Gary Gensler is a very educated gentleman with respect to crypto, professor at MIT, definitely understands the intersection between technology and economics and finance. And he also understands his charge as the head of the SEC. He's going to go ahead and regulate the space. A lot of the stuff he says that he sees look like securities, and so therefore they come under his purview and should be regulated appropriately, just like other securities are regulated by the SEC. And I don't think there's any issue with that. I think, that's actually a good thing, right? Finding out what's inside the SEC's regulation bucket and outside the bucket, I think is incredibly important for the asset class. I think it's important for investors. Certainly it may take away some of the bonkers speculation that goes on in the space. But at the same time, it'll usher in a class of investors that until that happens are generally staying away. So to me, people will say all in, this was a positive, this was a negative. I don't think it was either positive or negative. All Gensler was saying is, look, there needs to be regulation. We have precedent for regulation of securities. A lot of the stuff inside of this asset class is considered securities, needs to be regulated. We need resources to regulate, most importantly, legislation. Congress, get your act together, stop sounding off, get educated, and go ahead and give us the power to go ahead and regulate appropriately.
I like that last part of just, get educated and let us do this, because you're right. I mean, right now there are no lanes. It is the Wild West, respectfully. And for anyone that's developing in this industry, you're kind of just building and hoping. There are no lanes of which are giving you guidance as to this is, this isn't. And we saw that happen, following up with BlockFi and some of the recent action that they've had, just as an example where, company built something happened. Now this is all part of a conversation, and their potential, some of their business units are in question as to whether or not they are securities or not. Now, I'm just using that as an example. Whether that's true going forward or not is not the case. It's just an example of when building in this industry, as you said as well, David, and investing in it. Right now, there are no guidelines, and we definitely need to have some of those in place as well as we look to the future of applications furthermore as well. And I'll come back to you in just a second, David. Gary, anything to add on to David's point around this conversation of regulation and with the chairman of the SEC and kind of where things have gone over the last week?
Well, I mean, the situation is, so in terms of Gensler, I think that, they got the right, from my perspective, but anyhow, the right person at the right place at the right time. This is not an easy task. It's going to take some time, really getting his arms around it. But, this isn't a problem just for the U.S. This is a problem globally, right? Mm-hmm. And it's interesting how that's evolving from countries like Turkey, India, Nigeria, Bolivia, Ecuador. It's interesting how it's being viewed. And I have some, I have my own ideas around it, right, that I think is a little bit different, but it's interesting how it's being viewed.
Well, let's push on that for a second. Let's open up the world. Oh, go ahead, David. Did you have a comment further?
No, I was going to piggyback on Gary and turn this to a world conversation, which I think, I think Gary Gensler, in his remarks, made reference to, first of all, he started out, with the advent of Bitcoin and Satoshi and all that stuff, where he totally understands the value in technology for, rapid revolution in the world of finance. And so as other countries push forward, and frankly, I don't want to tip my cap to China, but the truth is that if the U.S. does not figure out a way to get up to speed, it's going to, in the end, bite them. We are lagging behind here is not an option. Allowing someone else to lap us is going to be a terrible result for us. And so therefore, we have to get involved here. And yes, we need to get involved in the way that we know, where there's protections for investors. But we do need to get involved. And I think that was another thing, that Gensler was somewhat pushing on, which is we can't ignore this. We can't shut this down. That's not an option here. And I just want to say, there's one remark that I actually disagree vehemently, and it's a factual point with Gary Gensler. He was talking about currencies and the three attributes of currency, which is store value, medium of exchange, and then a medium for accounting. And, he said store value, check. The other two, not check. And even though there's he said, a bit of exchange going on. To your point very early, Kyle, about Quiznos, there are certainly efforts going on to make it a medium of exchange. And I think that is a quickly developing and could develop quicker element that, I think Chair Gensler needs to recognize. And at that point, there may be a very different reaction that he needs to have to crypto if it satisfies two out of the three elements. It may force the third element, and therefore we will then be into currency land, as opposed to, in his view, agreeing with his predecessor, fully in securities land.
Well, and looking back on that global view, I mean, we've got Visa and MasterCard, along with Square and PayPal, who are all pushing that forward down into their merchants. We've now got Shopify that has turned on, non-fungible tokens for all of their merchants in terms of sales. But coming back to cryptocurrencies and digital assets as a whole, I mean, MasterCard is already partnering with a number of companies, early and late stage, in Australia, to push through payments and debit card and just general card transactions, being able to buy, sell, and transact with your digital assets. We know Visa is deep into this world as well. So this is rolling out. This is happening. Whether it's being acted upon by the users or not is not there quite yet. We'll see as those numbers roll out towards the end of the year. But nonetheless, these methods of payment, whether it be a debit card, a prepaid card, a credit card, there is that account management when it comes to using digital assets as a method of transaction on a global scale as well.
No doubt. Can I just say, on that point, I think that we have no choice but to go ahead and recognize a couple of other points that he made. First of all, the regulation, at least in the United States. Let's not talk about the world right now, but in the world of DeFi, and in the world of crazy high interest rates, I don't think that's going to be sustainable, right? So it's very nice for Binance to come out and say we're only going to allow 20-to-1 leverage. That is certainly not going to be allowed here in the United States. It's just it's not gonna fly. once there's regulation. It may continue, to be, capable or able or enabled around the world. That's not going to fly here. And also, not having what you say you have or misleading, your investors, whether they be debt or equity, frankly, I don't think is going to be, an acceptable form of making money. Hoodwinking people or misleading them about what your balance sheet looks like or what your practices are, regulatory stuff, AML stuff, it's just not going to be acceptable. So the shelf life on all that stuff, I think, is quite limited. The other thing that he was clear about is that a whole boatload of cryptocurrencies are clearly securities. And I'm okay with that. Because frankly, I don't think that digitization of assets, financial assets, stock, debt, whatever, should be able to flout the rules because they are digitized and maybe decentralized. They need to be in that world. Now, maybe after the SEC is done, we'll have full digitization and decentralization, of stock exchange, bond exchanges, so on, and that would be a great thing. Cuts out a lot of costs in the middle, and certainly leads to a lot more certainty in terms of ownership, and lack of I'd say certainty of title. So the sooner we can get to some of that stuff, that would be great. Again, you're not going to be able to do something extraordinary vis-a-vis capitalization, leverage, so on and so forth. You should have never been able to do that. And frankly, the SEC is going to make sure, at least in this country, that you're not able to do that.
Thank you very much, David, for adding that on. So switching it back to the global perspective, Gary, you were talking a little bit about what you've seen in a number of countries. We had the IMF that was pushing back on El Salvador's choice to bring Bitcoin into the country's monetary system. We've seen this as a conversation on a global scale with the digital euro, the potential digital dollar, also what's happening in Mexico. This is just continuing to be a conversation. Why do you think some of these countries are seeing pushback around digital assets as a whole? Gary, let's start with you.
Well, I mean, look at Turkey. Turkey's reason they say is a lack of regulation and central authority. So on one side, we have fear. Look at India. India's, has a draft bill proposing the ban on the cryptocurrencies. At the same time, they're looking at the digital rupee. Nigeria, this year, of January, February, has really focused on banning the on and off ramp for Africa. So we've got, a lot of it, Kyle, from my perspective, you've got Bolivia that has an outright ban. A lot of the countries are just fear because they don't want to lose control. At the same time, they believe that some of these cryptocurrencies can be used for nefarious purposes. So a lot of it, from my perspective, is education, but it's getting better. At the same time, we need to have the right kind of thing. I mean, they got caught kind of sideways with these rules. Look at Egypt, right? Egypt said that that these type of the digital, what is it called, harem, was prohibited under Sharia law. So we've got the laws need to keep up with it. This is going to happen. Cryptocurrencies are going to take place. The challenge is we've had so many unusual cryptocurrencies that have shown incredible market volatility that people are getting burned. And whenever that happens, from my perspective, the legislators come in and try to legislate against it. So what we don't want is a Dutch tulip phenomenon. At the same time, we want to make sure that we're fully supported because the cryptocurrencies do, from my perspective, create a more equal, democratized world. And so it's, we're in this crossing the chasm stage. It's getting better than it was before. Having Gensler in, at least somebody that understands it, it's really important for the U.S. and some parts of the world. But it's, we're at the beginning stage. This technology just come in. We don't know how it's being used. We got to make sure that it's safe, right, and just, and that if it doesn't need to be treated from a SEC perspective, it's looked at accordingly. But it's still kind of a Wild West market. Cryptocurrencies are coming out all the time, but we're going to see the next generation of them. I wrote a paper in Forbes on Monday that came out this Monday, and what I'm looking at is our own personal data. Imagine digitizing, tokenizing our own data. We go into a Facebook or LinkedIn or Google, but we should own that data. Imagine if we tokenize that and we start to look at things a little bit differently. And so I've written a couple of articles about it. I think the next generation of this, a lot of, anyhow, I don't want to go down into it, but because I could spend the rest of the day because I love this stuff. But it's a challenge. We got to look at things differently. We're inundated with data. We can't make sense of what's around us. We need to own what we have for the value of what it is. Tokenization provides a great opportunity for us to be able to do that. So we just need to look at this a little differently. I remember in the late 90s, early 2000s, I started e-commerce consulting companies, and I was involved in American Airlines, Delta, a number of the e-commerce websites, customer loyalty programs, etc. And it was kind of at the same time then, because people didn't understand, well, what is a gold, a silver, a platinum? How does this relate? How can you redeem the points? But now we're in that same vein. How can you redeem it for cash? How can you turn this into something you can touch and feel? So we're at that level now. Now we're going to start to see these new cryptocurrencies, these new tokenization models start to make sense of it.
Well, and just to add on to that for half a second here is, as you mentioned, I mean, this is still new. The idea of what we're talking about right now when it comes to blockchain and cryptocurrency assets, or just get digital assets. I mean, the first Genesis block of Bitcoin was mined in 2009. That was 11 years ago, 12 years ago, pardon me, 12 years ago. And that's what we're talking about right now, is the idea that these digital assets could replace financial systems for countries. That's 12 years from that first moment to today. That is a very, very quick turnaround from new technology being introduced to now going on to a global, back to David's point, on a global conversation of replacing financial systems that have been instilled for hundreds of years. So I think that that's something we all need to also continue to monitor, is while this is great and exciting, there is so much that happened in just a short amount of time. Imagine what's about to happen in an even shorter amount of time in the coming 1 to 2 years, as this exponentially grows and compounds on itself very quickly. I mean, these types of conversations are happening right now, good, bad, or ugly, doesn't matter. To David's original point of kicking us off on the recent conversations, they are happening now because this technology is going to exponentially grow faster than I think any of us realize at this point. And go ahead, Dave.
No, I mean, the thing is, but think about this, the dollar, right? I mean, the situation, when you have your own central bank and currency, what happens to your currency if you start to move to these digital currencies? What happens to your value, and especially, if they're fiat currencies, but there's not a whole lot backing them up, what happens, right? What is going to happen? How does that change things? And I think a lot of times the central bank are concerned about it, right? And rightly so. So we've got to just look at this differently. And how's it going to replace? How is it going to enhance? How can they work together? And those are some of the things we need to work out.
Right. David, go ahead.
Yeah. So, and I'll say the following, which is an important point, is that if I recall correctly, I don't think Gensler mentioned anything about bringing a financial system to those that currently don't have access to a financial system. And I don't think that that's a major problem here in the United States, but across the world, that is totally a different, issue and circumstance. And that is, a much bigger, not only financial opportunity, but a public policy, opportunity in terms of bringing a financial system, banking, to people that don't have it, millions of people that don't currently have that access. And so that may be a big, big difference in terms of how foreign governments, regulators, and so on view the risk reward calculation when it comes to digital assets. I think that's important.
It's a very, very good point. Gentlemen, I want to come around for closing thoughts real quick here as we're coming close to the top of the hour. Want to be sensitive on time, but this is a topic we're going to continue to cover. As mentioned, these conversations are happening on a daily basis here in the United States around the SEC and bigger regulation, but also on a global scale, to both David and Gary's point. So we will continue to monitor it, talk about it on a country to country, region by region basis as things develop, and expecting more developments on a more intense pace over the next few months as we head into the end of the year and Q4 of 2021 as well. So Gary, coming to you around closing thoughts on today's topic, and then also where can you be found online for continuing the conversation?
Yeah, absolutely. I mean, this digital transformation is upon us, and it's affecting all parts of our lives. And as this coronavirus, the Delta Lambda version of this virus keep moving forward more and more, the pace is going to keep up. This is a great time. So the digital transformation, the cryptocurrencies are upon us. Make sure that you look at those cryptos wisely. Make sure that you understand how many developers, how many folks are really engaged in those technologies to really back them up. It's a great time from that perspective. So, and also remember the Dutch tulip phenomenon. So don't always go with the trend. Look at it to make sure you got the right stuff. You can reach me, Gary Fowler, on LinkedIn, Twitter. Check out my shows that I have about every day. Love to see you there. Stay happy, stay healthy, and keep smiling.
Thank you very much, Gary, as well. David, to you, closing thoughts, where can you be found?
Yeah, one additional point is that Chairman Gensler did not say anything that would prohibit or inhibit a Bitcoin ETF. Bitcoin is clearly not a security, and the function of an ETF was highlighted by Gensler. He understands the value of it, and I think that there is nothing within his remarks that would stop him, the SEC, from approving a Bitcoin ETF shortly. I don't know if we're going to get it, but it doesn't seem that anything in his remarks pushed hard against it. In terms of finding me, you can reach me on LinkedIn or on Twitter. On Twitter, it's David D Tawil, and you can go ahead and send me an invitation on LinkedIn. Again, I'm the president of ProChain Capital, a crypto asset focused hedge fund. Thank you.
Thank you both very much, Gary and David. To our audience, thank you so much for tuning in. If you like what you heard, click like, share, and subscribe for today's episode and more episodes of VCTV. Big thank you to the LaToken team, to Maria and Hasmik for making today's episode possible. As David and Gary mentioned, we'd all love to hear from you, so please do reach out and connect with us on all social media, but please do add context where you heard us, where you met us, and what you would like to continue the conversation about. With that, I'm your host, Kyle Ellicott. A big thank you again, Gary and David. As always, a pleasure. With that, everyone have a wonderful day. We'll see you back here tomorrow. Take care, everyone.
Bye.
Bye-bye.